Hi, this is Larry Schober, CIO of SFG Alternatives with your Thursday, July 27th Traders Exclusive. Well, one thing traders are saying right now is, so is that it? Is that all this was about? Was nothing? I mean, sentiment, again, calm for the third day in a row. Some people are saying that China's squeeze is being unsqueezed as we speak, with liquidity crunch worries going by the wayside. Some are saying that taper expectations are being tempered a little bit, people getting back to reality. Stock market does bounce back about 0.75% towards the close today. One thing that's really interesting to point out is the S&P peak to trough from last week was 7.5%. Last week, the S&P 500 went down to 1560, and since then we have rebounded quite nicely, about 3.5%. It seems really the granular reason, other than the two things I mentioned earlier, was really volatility in other asset classes have started to calm down, and that matters to equities. So when you look at emerging markets, fixed income volatility and foreign currency volatility, they have stabilized over the last 48 to 72 hours, people starting to care a little bit less about the action from last week. Therefore, we'll see volatility in the stock market go down as well, and the equity market just continues to be on a tear, up about 0.75% today. In terms of sectors in the market today, we're seeing financials, home builders, and managed care outperform the S&P 500. On the other hand, we're seeing rails and materials take it on the chin, underperforming the S&P 500. And as I said, right now S&P 500 up about 0.75% to 1607. 10-year yields are down just a couple today. Also, U.S. dollar down just fractionally, especially against the euro and the Swiss franc. Oil is up about $1 on the day. Gold is flat, giving up most of its gains for the day. I'm Larry Schober, CIO of SFG Alternatives, for your Thursday, July 27th Traders Exclusive from the CME Group in Chicago.